Good morning, December 15th, 2025. What's up, everyone? Welcome back to the Clubhouse Insider. We are officially 10 days away from Christmas, and the markets have been anything but quiet as we head into the holidays. Last week on Wednesday, the 10th, the Fed announced their rate decision, which was a cut of 25 basis points. And while the headline made it sound pretty straightforward, the market reaction has been anything but. Since Wednesday alone, we've seen big swings in rates and bond markets. And that's a really important reminder. By the time you hear the headlines on the news, the market has usually already moved. So you can see here that rates are actually up higher than around the time of the cut. Conventional average 6.3, and then FHA and VA just below 6% still. So still really good momentum, but the markets are just confused, guessing. I saw a headline last week that says, if anyone tells you they know what the market's going to do, they're lying to you. So everyone is just kind of waiting. We're all on standby to see what we've got. So take a look at these charts. This is the Fed meeting right here on the 10th. So going into the meeting, rates were going higher, which was different than the last couple cuts. And then once the meeting happened, they got the 25 basis cut, because really going into the meeting, there was uncertainty on whether there would be a cut. And then boom, there was a cut, and markets loved it. And then all of a sudden they decided to not love it anymore and go the other way. So this is the 30-year conventional average chart. This is a really good illustration here, is the 10-year Treasury. Look at this right after the meeting. The Treasury loved it. And then all of a sudden, boom, here we are back up again. And then now starting the week, we are a little bit better. So it's all over the place right now. So looking ahead, expectations, they're just still very data dependent. Inflation is cooling, but it's not gone. And the job market remains strong, which keeps the Fed cautious. And that push and pull is exactly why we're seeing all of this volatility. So, and it's also why timing really matters a lot for buyers and homeowners who are looking to refinance or purchase. So if you're thinking about doing that, this is not a set it and forget it kind of market. This is a stay informed, stay flexible type of environment. So reach out early. The earlier the better, so you're positioned before the next move happens, not reacting after. I also want to bring up one thing here as we wrap up 2025, is home values, because it's something that some of my clients are having a hard time with as they look into refinancing, and a little bit of misunderstanding. So overall, the markets have appreciated. That means they have gained value. So even though we've been in this lull, even though sellers are giving concessions, we're still seeing values hang in there or even get better by, like you see here, 1 to 3%. So basically just holding in a nice way. But values are not automatically going up everywhere. In some markets, there's these big production builders putting up thousands of cookie cutter homes, and that supply is absolutely impacting resale values while those developments are still being completed. So that's why I use a real-time home value tool for my clients, and not just Zillow guesses and the different aggregators you see online. And because knowing your true value, staying on top of that, staying on top of insurance renewals, property taxes. We're going to be here in the spring in Texas. You got to go protest your taxes. This time of year is critical to protecting your equity. So if you're proactive, if you like to stay on top of things, you got to stay ahead of the market, know your numbers, and avoid reacting to any headlines after the fact. So reach out no matter what time. There's no time too early. That's what we're here for at Clubhouse Lending. I'll keep you posted as the data keeps coming in. And we'll see you next time with the Clubhouse Insider. Have a great week, everybody.